This is Quantum Financial with Tim Bresky.
NASDAQ and the S&P had its worst year as China and the U.S. tariff board began a not-so-friendly war. Are you covered in the next natural disaster? What can you do to be covered and what to do about it? 3 stocks that can help retirees get more income in their golden years. These stories and more on Quantum Financial for Wednesday, August 7th. I welcome you, everyone. The stocks for the week, July 29th to August 2nd, had quite a bumpy week. Ongoing fear of trade wars with China sent stocks lower. China said if the U.S. goes through with the new tariffs on September 1st deadline, China will retaliate further. China could revoke licenses, launch cyber attacks, or spring surprise audits on U.S. companies in China. Smartphones, apparel, and toys are in the line of fire in the tariffs. The NASDAQ and the S&P were down 3%. It was the worst week for those indexes. The Dow down almost 3%. My portfolio down 1.7%. As of the close for August 2nd, the Dow lost 98 points to 26,485. The NASDAQ dropped 107. The S&P lost 21. My portfolio down 36. Keep in mind, with any news or issues on TV, stocks will react accordingly because most investors get nervous a lot. Nothing to be nervous about. This is a long-term goal. The idea is to retire in style. My top winners in my M1 individual account. Let's go to that right now. The top winners were utilities. Up 2%. And my biggest loser was technology, down a whopping 4.5%. For the $1.05 cash that you see up here, let's look at the activity tab on the top. As you can see, Verizon Wireless, right here, ticker VZ, I received a dividend on August 1st for $1.08. Let's look at my Roth IRA now. Biggest winner was real estate at 3.5%. And my biggest loser was the Middle East and Vietnam at 4%. No dividend payouts for August so far, but lots of activity for dividends will occur. Let's go ahead and look at my equity stats. I like this free cloud software. You added in manual data and can look directly at how everything is going in real time when the market is open. Add in received dividends, add it in. It's very simple, always looking at the return year to date, which is right up here. When a stock of mine goes in the red around 11% or more, it's time to think about buying. Sometimes this is not accurate, but when I checked it yesterday, it was pretty accurate, but this is not accurate right now. So they must be doing updates here. Apologize for that. China Telecom is in the range at 11%. Which isn't a target of mine. Just scrolling down here. Domino's Pizza is in range. They are at 12.39%. Soledad Miners at 10.92%. Now let's go to the Analyze tool up here. On the right side, when we get to it, this is the right side here. On the right side, nothing has changed much. All these right here haven't moved much at all. For the top 5 return winners, Starbucks is at 74%. Best investment year to date. Is Starbucks as well. As we'll go down here. At 50%. And the worst investment for the quarter is China Telecom Communications at 21%. For dividends, let's look down here now for dividends. Right here we are. Almost to last year's amount already. As you can see here, 354 to 359.89. By the time August is done, I will have received almost dividends prior to 2018. As you keep buying shares, the more shares you get, the closer you get to retirement time. Are you covered in the next natural disaster? Weather forecasters have predicted a number of hurricanes. Elsewhere, other than the U.S. types of disasters from wildfires to flood, continuing to be billions of dollars in damage to homes and businesses each year. You and I can't control Mother Nature, but you and I can control and protect your property. Start with what your home insurance will and will not cover. Damages caused by wind, wind-driven rain. How about water coming into your home? How about rain through your roof? Windows and doors are usually covered by your homeowner's insurance. Most homeowners insurance will not cover water that comes from the ground up. For this, you need flood insurance. You should think about purchasing flood insurance even if you don't live in a designated flood zone. Everyone should consider flood insurance unless you and I live on the top of a hill. Even if you and I have escaped flooding in the past, doesn't mean it won't happen in the following years to come. There are so many ways your home can flood. Your neighbor could make changes to their landscape, and the next torrent water could come right toward your home. You and I can buy flood insurance from the Federal Emergency Management Agency's National Flood Insurance Program. The average cost is $700 per year, but higher risk areas can cost much more. I have listed a flood map in high risk areas in detail below. There is a 30-day waiting period for flood insurance to make effect. So don't wait until water starts rising before you purchase a policy. Do it today. The maximum flood coverage you can buy is $250,000 for your home and $100,000 for contents in your home. Total of $350,000 is the maximum you can get. If your home is worth much more than that, talk to an agent about private coverage. Private policies have much higher limits and may cost less than the National Flood Insurance Program, known as NFIP, depending on where you live. Some homeowner policies cover damage from tornadoes, wildfires, but earthquake policies are separate policies. Your insurance may not cover the cost of rebuilding your home. Think about adding extended replacement cost coverage insurance policy. This extends replacement pays 25 to 50% above the policy's limits. The extra cost can protect you from big increases in the cost of labor and materials after a disaster. Retirement golden days, free of worry and care. That should be the goal. The right mix of dividend stocks in your retirement portfolio can help make sure you don't need to worry about your financial health care as you stop working. What dividend stocks are right for you? Target or Target, ticker TGT. Target has struggled with tough competitors from Walmart and Amazon and other rivals in recent years. Target, the retailer, was founded 117 years ago, back in 1902. The company has rolled up its sleeves and pushed and hit faces and expanded its digital ecosystem, adding new fast delivery and pickup options, remodeling its 1,851 stores. It has also launched smaller format stores in urban areas, just like Walmart has done. Those Walmart stores are called neighborhood markets, and Walmart Express is a single category. Walmart has been opening these urban stores about the same rate as opening a Walmart supercenter. Walmart has 190 of these urban small stores. The average square feet is 40,000 square feet and carries smaller selections of groceries and merchandise. The Walmart Express stores has 20 open. On average is about 15,000 square foot. Hours are the same as Walmart supercenters. Target has competitions in every area and angle of the world. Target efforts to support and bring possible territories has worked. Target has repeatedly rose by double digits. Target revenue has rose 5% in 2018. Making it its strongest growth since 2005. Target digital revenue rose 36%, making the fifth straight year the digital sales grew more than 25%. If this continues in the first quarter of 2019, the first quarter its total revenue rose 4.8%, with a 42% increase in digital sales. Target even opened 22 new stores year over year. Target gross margin is beginning weighing down by higher supply chain and cost and fulfillment express for digital orders. To offset that pressure is by tightening control and expenses, which rose its operating margin to 20 basis points annually, 6.4% last year. Brookfield Infrastructure Partners. This company keeps dividends flowing. Its dividend payout has grown steadily in recent years. Ticker symbol is BIP. The company's cash flow remains very strong and continues to grow. That being said, the company will remain strong and be able to rise its dividend payment to be 5 to 9% a year. Brookfield Infrastructure's long-term growth is around its business model. The company looks for infrastructure assets that are underpriced, and it sells assets that don't perform as well as it would like to be. This wheeling and dealing allows the company to grow at solid pace. Brookfield Infrastructures has expanded in data centers and additional cell towers. These are high growth market, which in any assets to the company profits. They have other assets as well, which includes railroads, pipelines, ports, and utilities. These are properties providing reliable revenue streams. This dividend company can make and keep making retirement investors very happy. Royal Dutch Shell, ticker RDS.A. Many retirees are looking for stable in their portfolio. This is another good steady income for dividend payers. You need to find rock solid dividends that are going to give you that payout in good times and in bad times. That's why I'm recommending oil and gas giant Royal Dutch Shell to the list. Shell isn't going anywhere, one of the largest companies in the world by market capital and revenue. This oil giant is a major player of oil and is in no danger of collapsing anytime soon, for that matter, in a century or more. Nor is the oil industry in any trouble. Despite renewable energy, the U.S. Energy Agency predicts that oil and gas consumption will grow at a healthy climb through 2040. Natural gas is expected to grow by more than 30% over the next 20 years. Shell has received many record profits as other companies are subject to defining profits in years. Shell's profits has a lot to do with cost cutting and investments made in natural gas. Shell maintained its dividends to pay out to its investors. The dividend yield is at a whopping 5.8%. Where can you get 5.8% yield in a savings account? Nowhere. Shell is a strong business and a high yielder. Shell is an excellent stock for any retirement portfolio. Before we go, a final look at Wall Street. Dow lost 98 points, Nasdaq dropped more than 107, S&P off 21, and my portfolio cruising down more than 33. It was the worst week of the year for the Nasdaq and S&P. Don't forget to subscribe to my show. Make sure you hit the subscribe button below and click on the bell and turn on the notification. I love to read comments and feedback. It means the world to me. I want to mention stocks today. I am long on symbol ticker VZ, Verizon Communications, ticker CHA, China Telecom, symbol DPZ, Domino's Pizza, ticker SQM, Soledad Mining, ticker SBUX, Starbucks. I own these in my stock portfolio. That is the Quantum Financial Show for today. I'm Tim Bresky. Thanks for watching. Have a great day.